So, what's your sense beyond the sort of immediate crisis period? I don't need to tell you that the Indian banking sector, of course, had a multi-year now crisis. It's been one thing after another. Different segments have faced their own kind of pain. As we emerge from this health crisis, which converted into an economic crisis, do you see the whole, or at least part of the banking system, ready to sort of lend into the recovery and push that lever?
It's an interesting question. As of now, I don't see that happening. To be very honest, when I was still at the NDB, we had heads of global development banks meeting. This must have been sometime in April or so. The general view was that there would be destruction of balance sheets in a big way, including those of banks, and there would be a need for significant capital infusion. But we're not seeing that happen in India. I think here again, the credit can be taken by the regulator, because the cleanup of both the borrower and the banking sector was done, I think, just in time. I think that cleanup was over sometime last year. Capital as required was brought in. Private sector banks raised capital from the market. The government lent its helping hand were required to public sector institutions. And the institutions were in the banking institutions, the financial sector was in a, I would say, in a healthy state going into the crisis. I think this contributed in our case to a system which is not, at this point in time, impaired as much as one could have thought it could have been. In fact, I think it is in excellent, I would say excellent shape. If I look at the Q2 numbers in particular that the banks have just recently published.
Okay. Sir, a counterpoint to that, I think pretty much every bank has now withdrawn from, the sort of the infra segment, if I can call it that. Everyone's going for the AAA corporates. The PSU banks, while they have been recapitalized, one could argue that, there is still some hesitation in going big on lending, except, where the government is pushing them towards lending. Do you really see the skew that has emerged in the last few years towards retail lending and towards very high-rated corporate lending broaden out in this post-crisis period, or it could potentially get even worse?
Very good question. There are actually 2 or 3 points that I want to make here. In the past, corporates relied on bank credit for project finance. After the development banks of the previous century got out of business, including ICICI Bank, ICICI, which became a bank. So the corporates continue to rely on banks, but I think the interregnum. I think banks now realize that they carry a serious mismatch of funding if they were to continue to lend to the corporates on a long-term basis, where their own access to funds is short-term. I'm sure the regulator also is clearly aware of this and wants the system to be on a healthy footing. So I would think that this was a natural process whereby the banks will move to lend in a maturity range which they are comfortable with. Equally, I think what is happening is corporates are now, at least the larger ones, now in a position to borrow from the capital market. So I would think the crisis that we faced recently and going into the last 2 years puts things in context, that long-term purveyors of funds would be the capital market, and that is where access would need to be found. Whereas the banks will do everything else in the short end, starting with the retail consumer credit and then all other types of banking products that every bank does.